This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Very good afternoon, everybody. Live across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Businessweek Daily. Massar, Tim Stenovec. It's a busy day when I bring my stapler to the studio.
She travels with a stapler. That's actually true.
You know, my dad was an engineer.
Okay.
You know how they had like the little...
You know they have the mini ones, too, that you can put in your...
But can you do like what I have to do?
All right, she's got a stapler. You know it's a busy day. Hey, speaking of a busy day, traders sending shares higher right now. We're going to have more from Charlie Pellet in just a minute. But the S&P 500 and the NASDAQ Composite both up just about 0.6%.
Yeah, we could see record closes on those major stock averages. So we'll get to that in just a moment. A lot of it is that investors are waiting a bunch of data, economic data that's coming this week, and it could shape what the Fed does in terms of interest rates. So this hour, we've got kind of this top story roundup, everything from that possible Supreme Court opinion on President Trump's tariffs, also that Friday jobs report. We're going to get into some of the Fed conversations, Fed talk that we are hearing, and Fed challenges. Bill Dudley, former head of the New York Fed, has a great opinion column here on the Bloomberg, and a lot more. We kind of got to get that economic setup.
Yeah, those are just some of the things that are weighing on investors today. Hey, also, investors thinking a lot about what's going on in Las Vegas at CES. From CES in Las Vegas, Cristiano, Amon, CEO and president of Qualcomm. He's going to be joining us a little later this hour. Caroline Hyde doing that interview in just a few minutes. Jensen, too, his NVIDIA keynote. We just heard from Jensen Huang, that interview with Ed Ludlow.
Yeah, and let's not forget, in terms of the markets, 2026 off and running when it comes to new issues in the investment-grade bond market. What's expected to be a record year? We've seen, actually, this going on globally in just the first few days of 2026. Christina Lee is back with us. She's from Oaktree Capital Management. She's going to talk about the American corporate credit market, the health of American corporate credit. So looking forward to her conversation.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, let's get a check of the trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Here's what's going on. Lots of moving parts to this market. Yeah, we got you covered. But the Dow, the S&P, NASDAQ, all pushing higher. Right to the numbers. Looking at a record right now on the S&P, up 42, 69.44. The old high, 69.32. Keep it locked into Bloomberg Television and Radio to see how things shake out at the close. Again, right now on the S&P of about 0.6%. Investors are, however, awaiting data that could help shape the Fed's interest rate outlook. The Dow pushing higher. Record there up 498 now. That is a gain of 1%. NASDAQ Composite Index up 142, a gain there of 0.6%. The NASDAQ 100 Index also advancing up 0.9%. Interestingly, though, we are looking at a down day for the Bloomberg Mag 7 Index. Certainly Tesla weighing on that index. Right now, the Mag 7 Index down now by about 0.2%. Tesla lower by 4.5%. Your 10-year currently yielding 4.17%, with the 2-year 3.47%. Spot gold up $38 the ounce, now up 0.8%. $44.87 the ounce, but perhaps the bigger news in terms of the percentage move, silver up now by 5.5%, $80.80 for an ounce of silver. West Texas Intermediate crude pulling back today, retreating along with oil stocks as well. WTI down 57, drop there of 1.7%. Chevron, by the way, moving lower by 4.7%. And Bitcoin down now by 2.3%. Bitcoin 91,885. I did mention Chevron. Chevron has a small armada of ships that it is booking. Right now, they are sailing to Venezuela as the company emerges as the only exporter of the country's oil following the ouster of President Nicolas Maduro by U.S. forces. So again, recapping here, the Dow, the S&P, NASDAQ all advancing, a record right now for both the Dow and the S&P. That's a Bloomberg Business Flash. Bloomberg Business Week continues. Back we go once again. Tim, Carol, and yes, the stapler.
Hey, there's also a banana, but I didn't want to get into that in case I get hungry. You got it. It's a 3-hour show in total.
You got to get your potassium.
I got to get my potassium. Everybody's got to get their potassium. All right. It is a new year, off and running, stapler and banana in hand. One of the things that we know would be on our radar is a possible ruling when it comes to a key policy of President Trump's, Tim.
And so we might get something on that on Friday. That's when the U.S. Supreme Court scheduled an opinion day, indicating that date will be the first chance for a ruling on President Trump's global tariffs. More on what could actually go down. Bloomberg News Supreme Court reporter Greg Stohr is with us from the Bloomberg News Washington, D.C. bureau. So what does it mean, a decision day? Does it definitely mean that we'll hear about tariffs here?
It does not mean definitely we'll hear about tariffs. It means we'll hear about something. And keep in mind, there's a whole fall worth of cases that the court heard and hasn't decided yet. There were 10 cases they heard in October. They haven't decided any of those yet. So it could be that we get 1 or 2 of those cases, and you and I will never have another conversation about the Friday decision day. But given that the court has expedited the tariff case, they've signaled they want to decide it quickly, so it's not out of the realm of possibility that the tariff ruling could be coming on Friday.
All right. So maybe coulda, woulda, maybe we will see. The thing is, though, Greg, if we don't get a ruling, should we assume that something will come, like when? Like if it doesn't happen, because it is expedited, then what?
Yeah, so we'll probably get at least a couple opinion days over the course of the next couple weeks. The court is sitting, hearing arguments next week and the week after that, including the case about Trump's effort to fire Lisa Cook, the Fed governor. When the court is sitting, those are the days where opinions are a possibility. So, don't totally relax just yet. The only thing I can really say for sure is that the court's term is going to end around the end of June, and it will come before then. I would be surprised if we're still waiting for it by the end of June, but that's the only thing I can say for sure.
So let's say that we do get a ruling on tariffs, because this would be his signature economic policy. This is the president's signature economic policy, Greg. If we do get a ruling, has the Supreme Court thus far indicated to you, to us, to watchers out there, how it would decide this?
Well, the arguments in November, I think the consensus was, my view was that it was not great for the president. It wasn't definitive, but there was more skepticism than support from the justices. Now, a lot of things can change, certainly no guarantees, but there was at least the suggestion that the court was prepared to strike down both Donald Trump's reciprocal tariffs, the ones that are dealing with the trade deficit, and some more targeted ones that are designed to counter fentanyl trafficking out of a few countries, including China. It's possible we would see a split decision, and some tariffs will be upheld, others struck down. But the overall tone of the argument suggested that Trump was going to lose on at least some things.
How tricky is this decision on tariffs? Because to me it seems black and white, right? I mean, isn't Congress supposed to be involved when it comes to these kinds of things? But help me out. Understand what going back to the tariff decision, what is it exactly do they have to figure out?
So there is this law called IEEPA. It gives the president certain powers in cases of economic emergencies. And that law does not mention tariffs, but it does say that the president may, this is a quote, regulate importation. There's a bunch of words in between there, but those are the key words, regulate importation. And so really, yes, this is a kind of a simple case. Do those words mean tariffs? Can the president impose tariffs even though the Constitution gives that power to Congress? Now, if the Supreme Court says, yes, it does include tariffs, there are a number of other questions, a number of other arguments against Trump that the court's going to have to get through before they uphold them. But if Trump loses this case, yes, it is a pretty straightforward matter of statutory interpretation.
Well, I kind of hope nothing happens so we can continue talking to you in the weeks to come. I'm just going to put that out there, Greg.
I mean, even if something if something happens or if nothing happens, we're talking to Greg Stohr. It doesn't matter if it's about the Supreme Court.
Exactly. Hey, Happy New Year. Greg Stohr, thanks so much. Bloomberg News Supreme Court reporter. All right, so tariffs, I got to think about economic data, Fed talk. We all have to think about this. Also, the first Fed decision of the year. It happens actually later this month, so there's a lot that kind of can play into the markets.
Well, fortunately, we got with us Bloomberg TV and Radio international economics and policy correspondent Michael McKee here in our Bloomberg studio. Happy New Year.
Happy New Year to both of you. I haven't seen you in a year, you know.
The last time I think I saw Mike, we were having a holiday drink. The team was out there. You weren't there.
That's it. Wait, I did not know about this. I guess I wasn't invited. That's okay. That's not a conversation
You're always invited.
Okay, that's not a conversation for right now. Mike, I do want to start with where Greg left off. And if we do hear from the Supreme Court, and the Supreme Court indeed undercuts the president's signature economic plan, what's the backup plan for tariffs if IEEPA is ruled unconstitutional?
Well, the White House hasn't said specifically, but they've given every indication that what they would do is rely on a number of other trade laws that Congress has passed to give the president powers to impose tariffs. Some are on national security, some are on unfair trade. But basically, they all require the administration to make a case, to come up with a reason that the tariffs are being employed on a either country-by-country basis or a product-by-product basis. And so that takes a while. Now, obviously, the administration, knowing that this is a possibility, has been working on those kinds of reports, and it probably wouldn't take them too long to put them out there. There's also one other section in the trade law that allows the president, if he can determine that there has been unfair discrimination against U.S. products, he could impose tariffs for, I think, 120 days. And so he could do that unilaterally. And so probably what would happen if the court struck it down is he would try to put as many tariffs as would fit under that into that 120-day period and then use that time to come up with the other justifications for different tariffs. Some tariffs will go away, but there would still be a lot.
So other levers for him to pull. I mean, what does it mean for the U.S. economy in terms of how this plays out? Because it sounds like no matter what, we are going to continue paying higher costs for things, right? Because we just are, right?
Because tariffs are a tax on us. Yes, we're going to be paying higher costs. The interesting thing is that the total cost has not been, and you've seen it in the inflation numbers when we get them, they haven't been as dramatic as a lot of people thought. And one reason—
Why is that?
Well, one reason for that is that the president has backed off on a lot of tariffs. Another is that so many companies stocked up on goods before the tariffs went into effect. So there have been a lot of reasons why they haven't been as bad, but they're still up there, and we would still be paying. But probably the biggest impact would be just extending the confusion and the uncertainty about the impacts and how it's going to affect company decisions for longer.
Yeah, so the question is let's say the tariffs are left in place. Companies run through that inventory that they bought before these tariffs went into effect. Does that mean we will start to see some increases and maybe inflationary issues start to rear its head later this year?
That does seem to be the case. Companies have started more and more to say, we're probably at our limit of what we can absorb, and so we will have to raise prices. Nobody wants to be first, so there's kind of a holding off on that.
And I would imagine companies don't really want to say we're raising prices as a result of tariffs.
No, I won't even mention the products, but I did notice in the store the other day that a certain product is in a smaller bag now. So you're going to see shrinkflation. But there was a recent study by Geeta Gopinath, who was the former IMF chief economist, and a couple of other authors that found that Americans basically are paying something like 98% of the tariffs. The idea that other countries are absorbing them is not happening right now.
So if they were struck down, the president didn't pull any other levers, there would be more money in Americans' pocketbooks.
Yes. Now, it's part of the reason he's been able to be successful at this is we're talking about product by product, and it's very small amounts at a time, and companies haven't come out and put a sign up that says we're going to be charging you more because of the tariffs. If that were the case, then people would be angry. But we're still upset about the price of things.
Right.
We're just not associating it necessarily with tariffs.
Companies don't usually cut prices, do they? Like once they
No, that's why the idea that you can bring prices down is incorrect. You can bring the rate of inflation, how fast they go up, down, but you can't bring the prices themselves down.
Anecdotally, buying a pair of mittens Saturday morning for my son, I was in a store, balked at the price, and the person behind the counter said, those tariffs hit this stuff really hard. So, yeah, this stuff is getting expensive. Hey, Mike, before we let you go, the decline in energy prices and oil prices, does that offset if Americans are paying less at the pump, does it offset if they're paying more for other stuff?
It does to a certain extent, yes. I mean, the money that would have gone to the gas station now can be attributed to something else. It's not the president's policies that are bringing down gas prices, though. It's basically the oversupply of oil that is out there. But that is something of an offset, as will be the additional tax refunds that people get this year because of the tax cut bill they passed last year. So there is some tailwind to the headwind that we're going to be getting.
Hey, one other thing before you go. It's kind of a big week when it comes to economic data, right? We get the monthly jobs report on Friday. We've also had a bunch of Fed speakers out there. Bill Dudley has a column about the Fed's 6 big challenges in 2026. What's important this week?
Jobs is literally everything this week. It's the first clean read we've had since September, and so there's going to be a lot of study of that and what it tells us. What's interesting is we've seen this decline in the number of jobs created each month, which would give ammunition to those who want Fed rate cuts, but we were also expecting the unemployment rate to go down, at least according to the Bloomberg survey consensus, and if that happens, it says, don't cut rates anymore. So we're going to get some interesting data, and it'll give us a clearer picture of where the economy is, but it probably is not going to give us a clear picture of where rates are going.
So Governor Stephen Myron, who says that a full point of rate cuts is needed this year, you don't think that'll happen?
No, that's not going to happen.
Even if a dovish Fed chair comes in?
Even if a dovish Fed chair comes in, I would say that, yes, it could happen if we go into recession or something terrible happens. But barring that, the majority of the Fed seems to think we're very close to neutral, and they've forecast 1 rate cut this year. They could do 2 maybe, but you're not going to get really more than that.
When are we going to know about the Fed chair? I thought we were supposed to know it before the end of last year.
I guess the answer with Donald Trump is always 2 weeks, but
we were supposed to get it before the end of the year.
Yeah, I mean, there was a lot of
he said
signaling.
Sometime in January. So we just really don't have any idea. He may be still trying to convince Scott Bessent to take the job.
Well, and just since we have a moment more, we're going to head out to CES and Caroline Hyde in just a second. But one of the things that caught me, I was reading through some stories on the Bloomberg. Federal student loan debt rose to nearly $1.7 trillion at the end of 2025, up $54 billion from a year earlier. More of it concentrated among large debt holders and older Americans. I keep thinking about student debt, inflation, higher healthcare insurance costs, you name it. I mean, Americans are increasingly being pinched.
Obviously, and the K-shaped economy, the bottom leg of the K is getting longer as it brings in more people. But it is true with student loans, a lot of that is people who went to medical school or law school, and they had higher bills. And, well, I mean, they in theory have more income to pay that back. But we're also seeing, ever since the student loan moratoriums ended, people kind of never picked up paying again.
Yeah.
So that's a problem overall. And they started allocating that money to something else. And now they're kind of stuck because they bought something else with it instead of paying back their loans.
All right, Mike McKee.
You're looking at me like I did that.
All right, Mike McKee, no comment. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Hey, our Bloomberg Tech team, they're on the ground at the annual Consumer Tech Summit known as CES. Right now, Bloomberg Tech co-host Caroline Hyde sitting down with Cristiano, Amon, CEO and President of Qualcomm. Caroline, take it away.
Carol, thank you. It is a party vibe out here at CES, and a man who knows all about music from his hometown in Brazil. You'll be able to cope with the noise level, Cristiano, but you're part of not the noise, but the statements being made here at the moment. Robotics, when it comes to the future of autonomous driving, when it comes to physical AI. Talk to us about robots. Where is your technology really leading the charge there?
Yes, look, we're incredibly excited about this. It's a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We like robotics a lot because, by definition, it's an edge AI problem to solve, not different than what we did in automotive. You cannot put a server in a robot. You need battery life. You need a lot of integration of sensors. And physical AI is a massive opportunity, and it's an edge AI opportunity. So as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is his next opportunity. We actually have a number of robots that here at our booth at CES demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German KUKA, Figure AI, and I think it's going to be a great opportunity. And robotics, it's perfect for you to have high-performance computing and low-power connectivity is an edge AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials, but how soon is it fully autonomous robots? How soon do we start to have the humanoid versions in our houses?
Look, the way we think about this is things that you didn't thought were possible to do with a robot, you can do it right now using AI. I think industrial robot is the largest opportunity that we see in front of us, and it's probably starting as early as 2026. When you use AI to train a robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel that we saw with automotive. When we start talking about autonomous cars, a lot of companies went in and said, we're just going to get this full autonomous robotaxi. But until you get there, you can do assisted driving to every car on the road, assuming that the driver is there to pick it up. And we've seen ADAS level 2, level 3, highway autopilot, that's what we're doing. I think the same parallel applies to robotics. First, you have a lot of enterprise and industrial applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket and restock the shelves. Yeah. Something very simple. That opportunity is happening right now. Over time, we're going to have the domestic robot that will do everything for you.
Okay, let's go to your car focus, though, because your DNA is mobile, but then it has indeed gone to robotics. But autos is where you've dominated. Look, we've just had Jensen Huang on stage saying, hey, I'm getting into the world of autonomous driving platforms, too. How do you see that ecosystem evolving?
Okay. The most important thing is to really understand what's happening in car. Car becomes a digital product. So from Qualcomm, we're going to have a slightly different perspective. We think that the most important part of the car digital experience is the digital cockpit, because the digital cockpit became a new computing surface. Like your phone is a computing surface, the laptop's a computing surface, now the car. And when you think about AI coming into the car, agentic experiences, that is very natural, voice is very natural, that's going to happen to the cockpit. Today, I think we just announced we have now 75 million cars now in the road with the Qualcomm digital cockpit. Our pipeline is transforming into revenue, and we're designing with virtually every car company using the digital cockpit. The next part is what's happening in autonomy. And in autonomy, you have this transition. You can bring to bring safety and reduce accidents, you can bring assisted driving to every car, starting with level 2 all the way up, and then you're going to have full autonomy. So we have been actually driving the processor for this assisted driving, and now with a stack that we developed with BMW, we launched. It's available. People are testing the car here at CES, and it's available to every OEM to have assisted driving in every car model. And eventually, you're going to get, in a couple of years, to fully autonomous cars. Yes. I think Tesla is probably ahead. I will say the other solutions a couple of years out. But you're going to get to it, I think, fully autonomous cars. But you're going to have some level of autonomy in every single car.
And you talk about Tesla being ahead. Like Elon Musk has said he's not losing sleep over Jensen Huang coming after that piece of the pie. And, of course, they have a client relationship, too. Who can win, and how many players can win?
Look, there's going to be different types of car ownership. Some people wanted to drive the car. Some people wanted to have an assisted driving. Some people want to not own a car. Some people want a robotaxi. It's a big opportunity. I think there's going to be multiple players that are going to win. I feel the issue of fully autonomous cars, the biggest feature that you have to sell is safety. How safe your solution is, and I think those takes time. One of the advantages of Tesla is they've been doing this for longer, so they have a lot of miles, or real world miles, not only simulation, to perfect the solution, but it's going to happen. It's going to be a reality of many car companies in the next few years.
And of course, you've got a strong relationship with Google when it comes to being within the auto as well in many ways. Take us, therefore, where you see the next innovations. Robots were almost there. Cars were already there. Everyone I'm seeing is getting excited about the wearables, the pendants, the jewelry. Where does Qualcomm play in that? Because that's an edge device.
Yes. This is another area of excitement for Qualcomm because we are probably now willing to make a statement that is the evolution of mobile platform. Phones are not going anywhere. Phones are incredibly useful. They will continue to be useful in the same way that when the smartphone arrived, your laptop didn't go anywhere. However, when you think about AI and agentic experiences, this AI agent that is with you all the time, and you're going to ask a question, you'll answer, will help you navigate, help you do your daily thing, that's going to happen with wearables. Humans already decided what they're going to wear. They're going to wear glasses and jewelry and watches and rings, and you can put an agent, connect to it, give you context because something you wear all the time. So we're starting the emergence of those smart wearables, personal AI devices. We're excited about it because this requires for you to make something that is small, a lot of performance, low power. So every major AI company that is doing a device is designing with Qualcomm right now. We have every design, and some of those are being announced at CES. Some will be announced throughout the year. But personal AI devices are the new mobile platform.
Wow, okay. So if that's the way we're going to be doing wearables, where is the future of PCs? Because that was the first sort of broadening out. And AI PCs, has it really caught on? Are people wanting to go there? Is it more enterprise adoption versus a consumer adoption?
Yes. So Microsoft just launched the new version of Windows with agents. And I think we all been kind of waiting for this moment. And you're starting to see a lot of the SaaS companies they're being spent the past decade going to the cloud, creating agents as well. So I think we're just at the beginning of the inflection point of AI PCs. It's more an enterprise play than a consumer play, even though it will be part of a lot of consumer use cases. And I remain optimistic about it. Our PC business, we just started. We have about 150 designs. Most of our designs is because people wanted to do a thin and light and multi-day battery life. But now that you're going to put AI running all the time, that's where we're going to shine with unplugged performance. And it's going to happen. I think it's going to happen. In the enterprise boom of AI, you're going to see a lot of AI PCs associated with what is happening on the data center as well.
So, Cristiano, for all those people out there who are like, this is a bubble, this is hype, the real return on AI investment isn't coming yet, what do you say to that sort of critique?
Well, not for us. I think we're doing things on the edge, the stuff that humans are buying, and I think when we're going into the data center, it's for inference. But here's the answer to your question: everybody's playing to win, right? So we've seen this movie before. Everybody's playing to win. Everybody's building capacity to win. Will everybody win? Probably not. There are going to be few winners, and I think the way to think about this is, maybe in the short term, you could argue that, maybe there's overinvestment. I think it's a natural consequence of everybody playing to win. But in the long run, I still believe AI is underhyped. And the way I'll do this parallel for you, the internet in the year 2000 was probably overhyped. But in the year 2000, when people thought what the internet will be today, was a fraction. It's much bigger than what they thought it would be. And I think AI is going to be the same thing.
Cristiano, Amon, so great to get your optimism in here right on the floor of CES. A little loud, floor of CES as well. We're going to send it back to you in this studio. Carol and Tim, thank you very much indeed here from Vegas.
All right, so appreciate it. Great stuff. Caroline Hyde, of course, co-host of Bloomberg Tech there at CES 2026, sitting down with Cristiano Amon. He is, of course, the CEO and president of Qualcomm.
So for more, we're going to head to Las Vegas and bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. He's been walking the floors at CES 2026. He joins us right now. Mandeep, Happy New Year. Just now hearing from Caroline Hyde, talking with Cristiano Amon, CEO and president of Qualcomm. Notable to us, listening to that conversation, so much focus on automotive and then wearables. Is that the growth opportunity for Qualcomm right now?
Well, when I listened to Jensen, and he was at quite a few events these past 2 days, the numbers that he put out, $500 billion in aggregated revenue, plus through, Rubin and their Blackwell chips, the quantification is missing from others like Qualcomm and, anyone who talked about edge AI and robotics. And even Jensen talked about robotics and autonomous driving. But when it comes to numbers in terms of what's going to result in revenue, it's still at the data center level. It's still the inferencing workloads. And that is where I feel the demand is just insatiable. I mean, we saw how Micron was sold out late last year. It looks like Nvidia is sold out for their, Blackwell chips. And that's why they said demand is off the charts.
So
and, I think that's where I feel the real kind of pushes when it comes to CES is on the data center side.
So that's where we need to focus, which isn't as exciting, I think, for a lot of people as humanoid robots doing the dishes and folding the clothes and working in the home, or you being taken from point A to point B by an autonomous vehicle. But you're saying, despite all the flashy headlines from CES, really the growth still is in that data center business for inference and the like.
That's right. And look, these markets could be huge 5-10 years down the line. And NVIDIA wants to play in all these markets. They talked about being a systems company, then just a GPU company. So clearly they're expanding. They're the largest networking company now. That's what Jensen highlighted, and they're getting into storage. So they are expanding their stack and their addressable market, and they want to play in all these markets. But when it comes to actual demand, enterprise demand, it's still coming from, the hyperscalers, the capex that they will be making, and it could be close to $600 billion in aggregate capex from the hyperscalers. And then that is what is translating into demand for NVIDIA chips and systems. That is what's driving the upside.
In terms of kind of looking at different markets or all the markets, or also thinking about the whole AI spectrum, NVIDIA CEO Jensen Huang, as you know, gave the keynote yesterday, but he also caught up Mandeep earlier with Bloomberg Tech co-host Ed Ludlow earlier from CES. Here's what he had to say about kind of looking at the entire world when it comes to AI.
We're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum.
And that, of course, is NVIDIA CEO Jensen Huang talking earlier with Bloomberg Tech's Ed Ludlow, along with Roland Busch. He was alongside in that conversation. He's the Siemens president and CEO. They were together making their first comments on their partnership. We are seeing this, Mandeep, right? Like everybody working together, figuring out how to accelerate everything along the AI spectrum. I don't know. When it comes to NVIDIA in particular, whether it's the keynote, what we're hearing today, I mean, the stock hasn't been moving much in these first couple of days this week off of CES news. But what has been the most significant thing that we've gotten from Jensen Huang so far?
So he was very clear that the real constraint remains power. Every company that is in the business of training and inferencing workloads is limited by power. And if you have got 1 gigawatt of data center capacity, you want to focus as much in terms of driving efficiency, making use of that power that you have, and generating the most tokens, which is how everyone measures, AI workloads. And that's where, the end-to-end stack that NVIDIA has and probably Google TPUs have, they really have an advantage in terms of controlling this entire stack end-to-end. And that's what's driving his optimism that, companies will continue to buy NVIDIA chips and systems because they want to optimize for power. And that's why he's quite confident about their gross margins, which everyone expects maybe they will come down as there is more competition. But clearly, Jensen was quite clear that because of this power constraint, and they have the best sort of performance per watt, they will continue to command that premium pricing.
Is there a way for these companies to become more efficient when it comes to power? I know Nvidia talked a lot about that, but if that's indeed going to be the next constraint or the current constraint over the next 5-10 years, as it currently is, then is there like a Moore's law sort of thing, Mandeep, for power consumption?
Actually, that's where, everyone pointed to the fact that there is no shortcut to having more power capacity. And you just have to drive more efficiencies through different parts of the stack. And all these reasoning models are using more tokens. They are thinking more when they're answering a query, whether it's the ChatGPT query or generating an image. So because you're using more thinking time, that's driving token usage, but then your power is limited. So that's where you have to think in terms of efficiency, because there is no shortcut to increasing power. And I think right now the biggest limiting factor that I feel there is a consensus on is power, and that's unlikely to change.
Mandeep, 15 seconds. Are you bringing a humanoid robot home with you?
I mean, it's exciting to look at all these things, but like I said, these models are pretty big, and you're constrained by power, and so they're just not there in terms of functionality yet. But it's pretty cool to look at them.
I think if you're flying back from Vegas, do you have to buy a seat for your humanoid robot, or can you just
back in coach
overhead bin?
Hey, it's luggage.
Can you imagine? I'd rather sit next to a humanoid robot than a lot of people.
You certainly would.
I'll tell you that.
All right, our amazing Mandeep Singh from CES. When we come back, we're talking about corporate credit in the U.S.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ. They're all advancing on track for a record close on the S&P. 69.45 where we stand right now. 69.32 the old record. Right now looking at a gain on the S&P of 0.6%. The Dow, any move higher today will be another record, up 470 right now. The Dow at 49,445. That is a gain of almost 1%. The NASDAQ Composite Index up 144, up 0.6. Interestingly, on an update from much of the market, the Bloomberg Mag 7 index is down 0.4%. Tesla weighing on that index, with Tesla down now by 4%. 10-year at 4.17%, with the 2-year 3.47%. Spot gold up $34 the ounce to $44.83, up by about 0.8%. 5% gain right now for silver. Silver, $80.41, and a retreat for Bitcoin, 92,100 on Bitcoin, a decline of 2.1%. American International Group says Peter Zaffino plans to retire as CEO by mid-year and will be replaced by Aon's Eric Anderson. The announcement has sent AIG shares tumbling, with an analyst saying the lack of explanation for Zaffino stepping down could be a negative for investors. Right now, we've got shares of AIG trading lower by 6.6%. Again, recapping, both the Dow and the S&P are at records. S&P right now up 44. That is a gain of 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, global credit markets are sending off one of the clearest signals yet that investors are looking past geopolitics. We are clearly seeing that in various markets. At least 10 borrowers in Asia were marketing notes in the U.S. currency today. That's the most in a single day since September. And that comes after Monday, yesterday, emerged as the best day for the market in a year, with global dollar bond sales raising a combined $61 billion. And then we had firms selling $37 billion of investment-grade bonds in the U.S., Tim, yesterday, kicking off what's expected to be a record year for issuance. So we really wanted to look at not just the publicly traded global bond markets or corporate bond markets globally, but also what's going on when it comes to the private markets.
It's our weekly Women, Money, and Power segment. We speak with some of the most influential women from across the business world. We welcome back Christina Lee, Managing Director and Co-Portfolio Manager for U.S. Private Debt Strategy at Oaktree Capital Management. She joins us here in the studio. Happy New Year. How are you?
Thank you. Well, thank you so much for having me back on. I think 2026 is a new year, and I think, as you can tell from the public markets, there's enthusiasm. I think from the private side, there's enthusiasm as well.
What's the enthusiasm that you're seeing?
I think it's about M&A demand. 2024, so when we were sitting back in 2024, thinking about 2025, everyone said, with the new administration coming in, M&A is going to have a boom year. in 2025. That didn't really happen, right? The first 9 months, M&A stalled, predominantly because there was so much uncertainty, for example, around tariffs, et cetera. But now I think where we're seeing that enthusiasm is, especially on the private equity side, is private equity has held on to their investments for too long now. They need exits. They need to provide distributions back to the limited partners. So we are seeing a backlog of deals to hit for 2026, which should help.
But are they good deals? If the backlog is that they need to return money to clients, they need to exit. Like having to force sales is never a good thing.
I think from a credit perspective, they're good deals.
Okay.
And why I say that is I think there has been a bit of a mismatch between buyers and sellers in terms of price. What we've seen is those that will sell for 12 times, 15 times, 18 times sell. Doesn't necessarily mean a business that's going to sell for 10 to 11 times is a bad business from a credit perspective. And that's why I think for private credit, seeing that increased demand should be a benefit to the industry. Because in Q4, what we saw was heightened competition because there was this supply-demand imbalance. A lot more private debt, dry powder versus M&A deals. Even if you looked at public markets in 2025, the majority of the volume was actually repricings and refinancings. There's very little new issues last year. So this is our year.
So of new issues.
Exactly.
Big deal. So how much dry powder, though, is out there? Like how much needs to be worked off still?
Yeah, if you were to look at dry powder in private credit versus private equity, everyone's like, wow, there's so much dry powder in private credit. There's still a lot in private equity, too. There's multiples. And so that's why we think, one, not only is there dry powder for private equity, a lot of that dry powder is aging. They need to deploy it. These are closed-end funds. They have a certain set investment period.
Right.
So they're going to be also looking to more deploy as well. And there's going to be more companies out there for them to buy.
Is there a specific type of company that you're seeing that's going to be doing this out there?
Yeah, I think what we've seen so far is thematically those that can only get very high purchase price multiples. And what do I mean by that? For example,
so it's not necessarily a certain industry?
It's not a certain industry. I think certain industries have benefited, for example, from very high public valuations. For example, everyone talks about AI. Everyone talks about data center. We saw a good number of deals come out in the market for M&A last year around data centers, around AI, because they were going for such expansive multiples. We saw less what I call kind of nuts and bolts industrial businesses. They're not bad businesses. They're just not going to go for 15, 18 times. So I think people reserved and held on to their deals, maybe to do some add-ons, build some growth in to then sell it for this year.
So how much of the activity that you think will go on is the result of just pent up, couldn't do anything for so long, versus wait, it's a good environment. It's indicative of a good business environment, deal environment, economic environment.
I think it's a combination. It's probably 50-50. And the reason I say that is, if you think about it, have we had a normal year in terms of M&A?
What is normal?
Normal year, right?
Wasn't 2025, was it?
Wasn't 2025. It really wasn't 24. In normal year, I mean like a steady pace where expectations were met. It really hasn't. In a couple of years, we had supply chain issues, right?
I think we're just done with normal.
Right?
Like post 2020, that's it.
I mean, normal is done in general, right?
Yeah, totally.
You know, so we haven't had quote unquote that normal M&A year. And so if you think about the pent up demand, it just wasn't 2025. It's been since 2020, really 2022, when there was a break in the public markets. Remember, first half of 2022, you saw the public markets break, even the private markets started to break.
Right.
So it's been multiple years. And I think that's having this pent up demand grow. And then second, we have a falling rate environment. It's better to get debt capital, right? That's beneficial for these companies. And the economy, granted, there's cracks in it, but it's still holding up.
So what if that doesn't continue, though? I think that's one of the big questions. I mean, we're seeing investors a little bit enthusiastic as we await a bunch of economic data this week and hopefully for some more clues about what the Fed's going to do this year. But I feel like people keep pulling back their expectations about Fed easings because there are inflationary concerns. If we don't get a lot more in the way of rate cuts, I mean, what do we need to do to kind of keep the market as you describe it now?
Yeah, I think...
Or the level of activity. Yeah.
I think the economy has to hold up. I think one of the things that will spook investors and I think will spook the M&A market is any type of downturn. We haven't had a real downturn since 2009.
It's kind of amazing.
Right? COVID was too short. There's this massive bounce back after COVID.
But there was a lot of people got scared then.
Yeah.
A lot of people in the markets got scared. A lot of people sold. But that didn't count in your view.
I don't think that counted because I think what was happening in 2020 was COVID was quote unquote short-lived. I think you saw kind of March through September really M&A dry up. But then as things started to normalize and there was so much dry powder again to support that M&A market, 2021 was like a banner year. Back half of 2020, 2021's banner year for M&A and private credit.
What's the relationship between your world and equity market performance?
Yeah, I think part of it is on the valuation side, right? And spurring M&A. The better the equity markets are doing, that supports higher purchase price multiples for the private markets as well, which spurs, therefore, M&A deal flow, which helps us because that's a big driver of demand. When there's not enough deals in the market, what happens with private credit is you have a lot more competition. What does that mean? Decrease spreads, increase leverage.
Yeah, you need to see like it all kind of flow through here. Your new fund that you guys launched in October, the Oaktree Direct Lending Evergreen Fund, institutional clients completed your first close with about $2.35 billion in committed capital. How much of that has been lent out, deployed at this point?
Yeah, I think just thinking about that product in general, when you think about an evergreen fund, it's kind of a newer product in direct lending, and you're raising money every quarter. It's an open-end fund. And so from a deployment standpoint, right, you're always going to be looking to deploy. And one of the things that we found is a growth factor in private credit are these newer types of vehicles. If you think about direct lending, it has been always kind of closed-end funds.
Yeah.
I think LPs are asking for evergreen funds. They want someplace to get income, to be diversified, and a safe pair of hands and consistently deployed. And that's what Evergreen and frankly Oaktree provides.
Well, good stuff. Like, we were so looking forward to catching up with you. Happy New Year. Good to see you again.
Happy New Year as well. Thanks for having me.
We'll see you soon. Christina Lee, Managing Director, Co-Portfolio Manager for U.S. Private Debt over at Oaktree Capital.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading on this Tuesday. Carol Massar, Tim Stenovec. It is Tuesday, right?
It's Tuesday. Yeah.
It's Tuesday.
This is the first full trading week of 2026.
Look, we got a rally underway.
We do. Actually, we have not had a down day yet this year.
How many days?
It's been 3 days, Carol. And we've been here
3
for
days.
Every single one of them, so I'm going to keep saying this until
I know. You
we
love
actually
doing
have
this.
a down day. Energy having a down day, though. Down 2.9%. Communication services down as well, but every other industry group is higher in the S&P 500.
I have to say, I did a great live Q&A with 3 members of our energy team to talk about Venezuela.
If you may say so yourself.
If I may say so myself. It was a great conversation. I'm just going to say. No, it was good because of them. They were so... But it was, interesting to see where energy rallied yesterday. The stocks did, and we saw kind of the markets dip back and calm down today. So it's a reminder that story, it's going to take a lot for it to play out.
It was a great conversation. If you missed it, if you weren't able to participate, Carol, you're going to send out a link later.
I will send out a link.
Because it's available for listening after.
And it was great.
Yeah, I know.
Thank you for saying that.
You're welcome.
All right, I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move. With us is Bloomberg TV markets correspondent Norah Mulinda. She is in the house. Where are you beginning?
Well, I feel like we've been seeing this whole CES conference kicked off, and we're watching it through the week. So we have to talk about some of the names that were affected by the commentary that we've seen there. Let's kick things off with SanDisk. This is ticker SNDK.
I'm obsessed with this name already.
Are you?
Yes, go ahead. Go ahead.
Well, this stock has really rallied today, up as much as 25%. That's the biggest jump that we've seen in terms of a single day basis in nearly a year. This, of course, is commentary from Nvidia's Jensen Huang. He said that the memory storage chip market is quote unquote underserved, and that just sent that stock rallying. We're seeing shares up about 24% right now as we speak. The best performing stock in the S&P 500, just simply off of what Jensen Huang has to say.
It was the best performing stock in 2025. All of these players in the S&P 500.
Yeah.
Yeah, it was the top performer. And that whole group is just
Western
rallying
Digital
today.
Was up there.
Also a top performer in 2025.
Very true.
I'm a little obsessed. It's not the names we talk about a lot, but it's just kind of fascinating to see how this trade plays out.
Absolutely. Well, on the flip side, though, if we're still keeping an eye on what Jensen Huang has to say, we did see some data center cooling stocks that fell today. This is after the CEO of Nvidia raised fears about data center demand for these types of products. And so we are seeing as a second worst performing stock in the S&P 500, Johnson Controls International, ticker JCI, and some of its peers also falling, Carrier Global, Modine Manufacturing. But we are seeing Johnson Controls International in particular as the second worst performing stock in the S&P 500. Pairing its earlier decline, it was earlier down about 11% for its worst day in almost 3 years.
Trane Technologies also taking a hit, down about 2.8%. That's another one of those companies that is in the cooling space.
Absolutely. There's a lot of action that we're seeing right now. So people carry a lot of weight. His words, Jensen Huang's words, really carry a lot of weight clearly in this market.
Always do. It's not just about the jacket. Are those some of your decliners?
Yeah, those are a good group of decliners.
You might need to steal some.
I know. We share.
We share, exactly.
All right, take us to Lockheed Martin.
Lockheed Martin, of course, we are seeing this stock in the green. Earlier up as much as about 5.3%, now pairing a bit. But this after it struck a deal with the Pentagon to triple production of its Patriot air defense missile, which we know is deployed not only by the United States, but about 17 other countries. So really critical here. This agreement is really clearing the way for negotiations over a 7-year contract to increase production of this. And this is really just a broader U.S. push to ramp up weapons output. So you are seeing the street clearly liking this stock coming in behind Lockheed Martin today.
A little pause.
Are you going to steal any of those?
A little pause for emphasis.
Are you going to steal that one?
I might have had SanDisk on my list. Actually, I
Share,
had like 4.
I know.
I had about 4
There's
names.
no room to steal any because you're
already
at capacity.
They're all in the same space. It makes sense.
Hit 'em all.
Yeah, exactly. Norah, thank you so much. Really appreciate it. Bloomberg TV Markets Correspondent Norah Mulinda. Be sure to check out more conversations like this. It's our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
0.6% to the upside for the S&P 500 and the NASDAQ composite right now. Once again, almost every industry group is in the green. Healthcare leading the way, up 2%. Materials up 1.9%. Industrials up 1.3%. Energy, though, taking a tick lower, down 2.7%. As a group. Communication services down about 0.7%.
Hey, we should remind everybody what's coming up in the next couple of hours on Bloomberg Businessweek Daily. We're going to get the latest on Venezuela. We've got a small armada of ships booked by Chevron sailing to that country. This is the company that is among the U.S. major integrated companies, the only one licensed to operate in that country. So we're going to get into that. We're also going to get into the prediction markets. We were talking about this yesterday.
There's some great prediction market stories.
This is going to be a big story this year.
Yeah, I mean, we talked yesterday about the story about the $34,000 bet on Maduro being ousted that was just placed just ahead of the announcement that he was being taken to the United States. That wager ended up netting that person $400,000. A lot of questions about the prediction markets, the regulatory oversight, the role of regulators, and is this just gambling?
I have so many questions about this in terms of can anybody do this? And you do wonder if you've got some inside information. Certainly could give you an edge to really impact and predict how it trades.
Yeah, today's big take is one of the most read stories. We were talking about it in just a few minutes. Also, this is pretty chilling, Carol. The small-time crypto investors who are facing violent attacks. Another big take.
All right, for those watching on TV, the close coming your way in just a moment. Tim and I continuing on Bloomberg Businessweek Daily.